Namaste. With the trend observed Jan onwards, I would say, of market being volatile and reels being viral on social media, predicting stock markets getting into crisis, and it will be worst than 2008. There is an increased anxiety within the current investors as well as the aspiring investors. In lieu of this, we thought we should have a quick gupshup with Shri Hemant Powale, uh, founder and managing director, Prime Vista Investment Private Limited, to seek his expert views on this area. Hemanji, in the last sharing learning episode, you have simplified the aspects of investment management in a very concise manner. In today's Gupshup, the attempt will be to possibly have more information gathered on mutual funds and possibly some take or opinions from your side on the so-called market being volatile. Once an investor invests an amount in mutual fund, right? So, will you want to explain on how the mutual fund organization actually makes further use of these funds, or rather operates with these invested amounts?
Sure. I'd like to definitely speak on that. So mutual fund it's a pool of investment, as we discussed in the last episode. So it's a pool of multiple investors investing in a mutual fund. In mutual fund, there are two types of mutual funds or investment happen, which we discuss about. One is equity mutual fund, one is debt mutual funds,
Right.
or there are hybrid fund which invest into equity and debt both. So anything invested into equity funds, the portion of investment which goes to equity markets get the ups and downs effect of
Right.
equity markets over there.
Right.
The debt mutual funds are as good as like fixed deposit or a
Sure.
fixed income, we call it.
Sure.
So the mutual fund invest in both the side, based on the investor's risk appetite and the need and time horizon. The people like us who are into advisory or guiding people how to invest,
Hmm.
we recommend a certain set of asset allocation,
Sure.
understanding the risk appetite.
Sure.
So based on that, suppose if you select the equity fund is ideally suitable for longer time horizon of 3 to 5 years time. Then the equity fund manager will invest that money into various stocks.
Okay.
He will invest that money into equities mainly,
Okay.
shares.
Okay.
He will divide that investment into, let us say, 10 different sectors
Okay.
like IT, infra, banking and finance,
Okay.
metals, and so forth and all. And in each sector, he probably select 3 to 5 companies,
Hmm.
the leading companies into that sector.
Okay.
So the mutual fund investments get diversified, divided into various stocks by mutual fund manager.
Okay. Okay.
So this investment get diversified, spread across equities, spread across fixed income products.
Sure.
So this is how mutual fund spread the investment underlying.
Okay. Where are the maximum investments made by the mutual fund organization? Is it in equity or debts? I mean, how do we explain this further?
So as I said, we need to select, as an investor need to select where to invest. So there are
Okay.
some mutual funds which purely invest into equity.
Okay.
So they will invest almost 100% money into equity
Okay.
shares.
Okay.
There are some mutual funds who are like a hybrid fund, which invest 65% money into equities,
Okay.
remaining 35% money they invest into fixed income products,
Okay.
right? There are some mutual fund which invest only 30% in equity,
Okay.
remaining 70% into debt kind of investment.
Okay.
So we as an investor need to choose the scheme
Sure.
and which select the asset allocation underlying.
Okay.
How to select the criteria is very simple. The investment fund which invests 100% money into equity markets are suitable for a time horizon of 5 years plus.
Okay.
So suppose my goal is coming up 5 years from now, or I'm investing today and I need that money after 5 years from now, then I can choose to invest into equity fund.
Okay.
Okay. If my time horizon is say between 1 to 3 years, then I may look at investing into something like a hybrid fund.
Okay.
Hmm? And if I my horizon is 1 to 3 year, but I don't want to take a risk on my capital,
Hmm.
then the equity savings fund, which generally invests 30% in equities, 70% in debt, are suitable.
Okay. Okay. So, is the mutual fund performance linked to stock market performance, and any kind of impact to stocks? Does it impact mutual funds directly?
Sure, yeah, it definitely impacts. So, as we spoke about equity mutual fund, so if you are investing into equity mutual fund where the fund manager is investing entire money into 100% equities,
Okay.
there will be impact of stock market correction
Sure.
or upside
Sure.
volatility as we are speaking. So, the mutual fund will definitely equity mutual fund will get affected,
Hmm.
not the debt mutual fund.
Right.
And the best part of the mutual fund is like suppose we had seen in past, like if the equity market had corrected say by 10%, the mutual fund will get corrected by only 7 or 8%.
Okay. Okay.
Okay. At the same time, if the market is going up by say 10%, the
Okay.
mutual funds may outperform and
Hmm.
deliver you 12-13% returns.
Okay.
No, 2-3.
Okay.
So it gives a fantastic cushion when the markets are correcting.
Right.
Downside risk they minimize,
Right.
and on upside they create alpha. So
Okay.
that's what a job of a mutual fund manager.
Sure. Right.
So the market effect is definitely there,
Right.
but a fund manager is working on the side of reducing the losses.
Right.
When the market is correcting and creating alpha, the market is going up.
Sure.
The equity mutual funds as a category only will get impact of market volatility.
Okay. Okay. Sure. So, based on your experience and the trend analysis performed, after a market collapse or volatility, how long does it take for the market to resume or regain and start performing back?
It is very difficult to say that.
Right.
Every correction is different.
Sure.
And we have seen that this kind of correction comes once a while in a decade.
Okay.
If you looked at the last 30, 40 years of stock market,
Sure.
every decade there's some correction.
Right.
Let us look at COVID as an example.
Yeah.
That is one of the biggest correction we seen in last decade.
Yeah. Yeah.
So which was year 2020.
Right.
So if you look at the COVID, the February 2020, the Sensex was roughly at 41,000 number.
Hmm.
The Sensex was at 14,000 in
Sure.
February
Right.
2020, and everything was going fine.
Right. Yeah.
And suddenly the news started coming up from China side where the
Yeah.
COVID is coming, the virus is there, it's a deadly virus, it is
Right.
spreading fast.
Right.
And because of fear, as this coming to India,
Right.
the people started worried and they thought that the economy will get into trouble. It's a global event, it's a pandemic,
Right.
and there was a selling which started happening in the stock market.
Sure.
So within 1 month time, since market had corrected from 41,000 to 29,000 Sensex,
Right.
which is roughly 30% correction in 1 month's time.
Sure.
And then people thought like everything is gone now. The market is not going to go up because COVID is not ending, and the new version of COVID is
Right.
coming up, and people are losing jobs, factories are getting shut, people are
Sure.
losing life. There's a fear all around.
Yeah.
You
A lot
know,
of
lot of
unpredictability is. Yeah.
unpredictability, and people thought that markets are not going to recover
Sure.
sooner. It
Right.
might take time.
Right.
But market surprised.
Yeah. Yeah.
The COVID recovery was around the range, and India did fantastic in
Right.
COVID recovery. And it's all sentiments.
Sure.
And within a year's time, after COVID, within 6 months' time, market started recovering.
Yeah.
So if you look at the point-to-point numbers, February 2020 market was at 41,000. It came down by 30% to the Sensex level of 29,000 in March
Right.
2020.
Right.
And if you look at March 2021, 1 year down the line, the Sensex was back at 51,000.
Yeah.
So jump from 29,000 to 51,000, which is 75% upside.
Yeah.
So market always surprise.
Sure.
So when it corrects, nobody can predict when it is going to recover.
Right. Right.
So every cycle, every reason of market correction is different. So
Sure.
the recovery might take a short time or long time. It all depends on various
Right.
aspects of
Right.
how the industries are coming back, how people are coming back to life, how
Right.
the sentiments are getting built.
Right.
So every market correction, the recovery timeline could be different.
Sure. So, as an expert, what is your analysis on the prime reasons for the market volatility? And what is your forecast for the market to come to normalcy?
In recent times, if you
Yes.
see, the market had corrected by maybe 15 or 20% around that range
Right.
since January,
Right.
and everybody expected that U.S. elections,
Yeah.
Trump is going to win.
Yeah.
And if you look at sometime from October to September, no, October 2024, people thought Trump is going to come,
Sure.
and if the Trump wins the election, it is good for Indian economy.
Right. Right.
And it's definitely benefit. India will benefit because of Trump coming up in
Yeah.
US,
Yeah.
basically. And the FIR, the foreign investors, was little uh, positive about US markets.
Hmm.
So they moved money from Indian markets to US markets.
Okay.
And so the correction happened in that phase from, say, October to December.
Yeah.
The FI has withdrawn the money from Indian markets and they invested into US market,
Right.
knowing that US market can give better return.
Yeah.
But post election results, and you have seen the announcement coming from Mr. Trump,
Yeah.
it was different than what people expected,
Right.
and it
Right.
was at times quite unpredictable what will happen post he joins the office and Oval Office
Yeah.
and what.
Yeah.
And there was fear about what will happen post that.
Yeah.
So that correction which happened because of Trump coming in, there was some expectation from FIs to gain more returns in US.
Hmm.
But after Trump coming in and all that announcement which he is making today are uh, positive, but at the same time very fearful.
Yeah.
So again, the FIR started putting back money in India,
Okay.
and now you see the correction is over now,
Yeah. Yeah.
and the recovery had started. In last
Sure.
1 week, there's almost 7-8%, 6% upside in last
Right.
1 week's time.
Right. True.
The best part is Indian investors stayed invested.
Hmm.
Rather, Indian invested more money in these times.
Okay.
So our investors have become more mature,
Right. Right.
since COVID, I'll say, and we got a great confidence and trust on our economy
Hmm.
as an investor.
Hmm.
So this time the recovery was quite faster.
Hmm.
you know.
Right.
So it is quite unpredictable
Sure.
to say when and what factor will change the market dynamics.
Sure. Sure.
Yeah.
Hemanji, what is the advice you'll want to give to investors who get worried and influenced by the information posted on the social media related to stock market situation?
See, if you look at the social media, whatever reels comes up or any information coming on, even the news channels or a
Yeah.
newspaper for that matter, people you'll see when the corrections are happening, you will see a lot of negative news coming up.
Right.
The bear market is there, and China is doing this, India will get impacted, and all that news starts coming up. So my suggestion to the investors is like not to get worried about it, not to get panicked, because
Yeah.
what information comes on social media is sometimes with a very limited input they have, or they look at a very short term period. So I suggest my investors to look at the long term picture.
Right.
If your investments are done with a goal purpose, it's a goal based investing, and if you have a longer period of investment, time horizon for investment, then we should not get worried about what's coming up in social media
Right.
and any of the news posts. If you look at what Warren Buffett says, it's very interesting. So, and we follow Warren Buffett very much.
Yeah.
And Warren Buffett talks about, is one of the interesting quote talks about always be fearful when others are greedy.
Hmm.
When the markets are hit up, everybody want to invest in stock market, and people say, "Our stock market is doing well, and you should invest more," and all that. You should be little fearful of investing at that time, basically. But at the same time, when the others are fearful, and if there's a correction in the market, people are worried about crash coming up and news coming up like Indian economy will get into trouble because
Right.
of what is happening in the world. That's the best time to actually invest more.
Yeah.
So when others are fearful, be greedy and
Right.
invest more. Probably you will get much better returns in that time. So follow Warren Buffett's quotes. Whatever he says is experience of many years in the equity
Sure.
markets, and
Sure.
that's truly the path, or a
Right.
guiding light to look at.
Sure.
Yeah.
Hemanji, your inputs have provided clarity. Appreciate your valuable time today over the Gupshup, and thanks for sharing your expertise. Stay healthy, happy, and blessed. Thank
My
you.
pleasure. Thank you so much. Thank you.